Good afternoon, everybody. It is currently 2:30ish, which is an hour into New York Open. We entered this trade off stream. I'll explain that. Explain the trade I took yesterday, last night, and then I will look for some other opportunities, my plans for this trade, and then we can study back in the past of EURUSD. I think we got maybe one or two more sections to write about, and after that we can then move on to the video. So we're going to plan to stream for the next 3-ish hours, 2-3 hours. So strap in and get ready. Let me just pull up my previous notes. So last trade I took, or the trade I took last night. First, let me open the Telegram so I can show you when I sent it in. Oh, I didn't send it in. Did I even take it? I did take it. Hold on. Give me a second. Okay, I'm back. Apologies, just had to apply some medication. Okay, so it was NZU. I just remember it being a sell. Okay, so we had, or we have rather, this green area being the market gap. So last week Friday and then Sunday evening, we had close, open, there's a gap here. Price went up a little bit, consolidated, and then, well, not consolidated, but stayed around here, then filled it, came back up, continued going down. So we just got the wrong entry. That's literally what happened. So I'll explain why I was thinking about this. So when I was looking at the markets, I saw this order block right here and this fair value gap right here. Get rid of this, and also get rid of, unless, or it's just the same thing. Oh, this needs to go. Okay, so we had consolidation here. The price displaced out of it, came back up to what? The bottom of this consolidation, number one. Number two, you can argue maybe to the bottom of this wick. So consolidated between this range. Talking about this gray box. You can see the price consolidated in this range, then came out of it, and it's returned back to where? The area of consolidation. That's something we learned, I think. I didn't write down which episode it was, but I believe it was episode 2, where he was talking about how price can move from consolidations into swings. So consolidation here, price came up to it, which is what? A fair value gap on hourly. It's a fair value gap on the 4 hourly. And it's also a fair value gap on the daily time frame. So if you're bearish, it coming and changing direction from here is eligible. You also have structure on your side. This swing high swept, didn't get taken out, but it swept this high. And then, as in we didn't close above the high, we just swept above it. And we have this bearish structure idea here. You then also have on smaller time frames, that fair value gap is also present in multiple time frames. So on the hourly, you can draw it here. I'll draw it just to make it a little bit easier to see. And the reason why I can draw it here is because it lines up from this high to this low. We have this being the optimal trade entry from 079 to 62 right here. So 62 and 79 is where we have the optimal trade entry. And you can see price comes up right almost up to that 79 level. And that orange line is a 581 flat level, which is the institutional level. And what institutions use that as? Well, they use it as where they place the orders around that area. And why is that key? Because price respects it prior to it. It says wick respects it, wicks, but doesn't close below once. Apart from here, when it does, it is a fair value gap. I mean, it's an institutional push. And we pushed off from the 5822, 582, and the 5818 level downwards. So then we come up to this 518 level, rejection, come back up to these levels here, then push down. Price comes up to this fair value up again, and it's at this 0.79 level, which is optimal trade entry for sales. And it also lines up with the institutional order flow, and it's also the bottom of the consolidation area. So there's 3 areas of confluence. So when price does this, you can then go to the daily time frame and see it where this green line, we took liquidity. So on the small time frame, it's a little bit more difficult to see because it's not an instant displacement back into the range. But we take this daily high, and on the larger time frames, you can see it's instant. This is last week Friday. This is current Monday, right? What happened? Well, we opened here. We had this market gap, pushed all the way up, and we come back down. So we're taking this liquidity by a margin, and we fill this fair value up. So this is now an ITH. So we had the swing high created in this fair value up, which is the ITH, which also is taking out liquidity. So it's strong. There's a lot of confidence. It's like a story being told. And then when you go to the smaller time frames, we can see that we didn't take this Asia session liquidity because Asia is actually taking this liquidity from the last week Friday, the high of last week Friday. So once we open, we travel up a bit in the opposite direction into the areas that we mentioned, the psychological level, the fair value gap on the larger time frame, the optimal trade entry, 79 level, the bottom of the consolidation, and then we displace downwards. That's the key. That's the confirmation that we're available to enter. Because at the core of it, what we're doing is we're actually selling against a bullish run, not bullish bias, a bullish run, meaning that price is currently in a smaller time frame or within the chosen context, which in this case is a smaller time frame. We're seeing higher highs and higher lows being created, and we're trading sells. So we're going to need a lot of information outside of just a bull run to confirm that we're going down. Because if you only looked at displacement, well, you would have got a signal here. You would have got a signal potentially here. So in one here as well. So you would have had many false signals because it's against the bias. But when you're with the bias, even if you're trading against the bull run, which it could in this case be in a small time frame, you can still be profitable. Well, that's kind of the idea of the strategy. So that was why I entered the sell. Now, in terms of where I entered, I think I entered around this orange box, purely because that's the only place I've drawn something. So I think this orange box here was where I got my entry in. Or if I didn't actually get it there, sorry, I got it on, I think it was this, I can't exactly remember. I don't know what my stuff. If I can just open my trades, let me see my trading history and see from there. So I got in 58016. So I got in here. So loss was 5807. I was above this order block. So above this order block with some change. This was my trade that I was taking right here. I think it's because this was an inverse fair value gap, and we created a potential order block. So, oh no, I remember. It was this fair value gap, but I entered, it's like as if I entered here, but with spreads. Also, it was fine. It was a little bit late. So I got in as if it was a touch here. If I was meant to do this, if I had traded properly, I would have set my stop loss above the first candlestick and add like a couple of pips. 1 pip for me and then like another pip for spread. So NZD USD would have taken me around about 11 pips. And then I'll be targeting here, which is the 1 to 1.5, which is not really what I like to take. So that's why I kind of reduced the risk in terms of how much I was risking. I also reduced the stop loss to kind of increase the risk reward ratio. I did think that this was going to be the place that price didn't respect. There's also the Asia session open as well. But my point is this: it was a bad trade. I didn't trade it properly. If I was meant to trade it, I should have set my stop loss up here, and then that way I would still be in the trade, as you can see. And even if it came up here, still, yeah, it came back all the way back down. So that was the fourth trade. I did take this trade at like midnight-ish or close to whenever that time was, like in the evening of yesterday. And it hit stop loss at 3 a.m. for me, which would have been New York time. That's what, 10 p.m. Anyway, so that was NZD USD. Now, context-wise, I forgot I did all of this off stream, so I need to redo this. We are still bullish on USD for this week. So I know it's currently bearish. It's got a black candlestick color, meaning that it's currently bearish because we're lower than when we opened on Sunday evening. But I'm still bullish, and I'll tell you why. Well, one, we have our targets above us that are better. What are those targets? So we have this swing high, which lines up with this 102 level flat, which is the institutional level. It's going to be liquidity above this. And it is a swing high, and it's an ITH. ITH means that it's a high that is filled a fair value gap. That means that whilst you're following a trend, price shouldn't come above or below an ITH or ITL. In this case, we're going to think of it bearish because that's what we're looking at. Price, as it's bearish, shouldn't come above this ITH. It just shouldn't, because there's nothing really to balance above it. Doesn't mean it can't, it just shouldn't, specifically speaking. So that's why whilst you're in this trend, whilst we're in this bearish trend, we never once came above this. Coming above this means that we're probably going to be bullish, depending how we come above it, if we close especially, right? So that's the posture. So it's a swing high, it's a strong high, it's got solidity. We just explained why we called it an ITH. It's an intermediate, what's it stand for again? I think it's intermittent. Yeah, it's an intermittent high, I think is the correct terminology. So there's that. We also have a weekly fair value gap above right here, which is in line with some institutional order flow, which would be an order block. And that would be our first target right here, this high. And on top of that, we have this weekly fair value gap bullish wise, and we've come back to fill it already from the past couple of weeks. And we've created a swing high a swing low, sorry, in doing so. So we're now bullish up until this high, which is our target. So we have a target above us, and we have price action in our favor. We've rebalanced this fair value gap, filled most of it, created a swing low, which signifies the next candlestick would be a swing high. How do you know the next candlestick? Well, swing high is only formed when you have two candlesticks to either side of it closed, and the low of those two candlesticks are higher than the current or the middle candlestick. So this middle candlestick right here, which is a black one, this low to the left of it is lower, and then this low to the right of it is higher. I mean, left of it is higher, and the one to the right of it is also higher. So because they're higher, this now makes this the swing low, right? By terminology reasons. So that means the next candlestick, which is this week, As you can see, it's the current candlestick that's currently live and moving. This is now bullish, and it lines up with our target. So that's why we're bullish on USD. We also have no news on the Monday. There's only news on Tuesday, and it's orange news for USD. So we're pretty much good on USD till tomorrow, or even Wednesday. So we shouldn't expect much manipulation in terms of like crazy manipulation. So we're bullish on USD. So that means we're selling all of these. That's kind of what fueled the NZD trade last night. I just wanted to enter something small, wake up to some profit. Didn't happen. Didn't trade it properly, to be fair. Nevertheless, EU, this is a trade we are currently in, and I'll explain why in a second. So again, you have the context now of DXY that we're bullish, meaning that we are bearish here, buying the dollar. If you look at price action, you can see here that we're bullish, big weekly pushes to the upside, and we've consolidated. We've been consolidating for a while, like right here, and we sweep above these highs and the upper limit of the consolidation, displace back down all the way to the bottom of the range, come all the way back up, sweep a bit again, and then we come all the way back down beyond this consolidation areas, and even below this ultimate wick down here. So we actually are bearish shape wise from that consolidation standpoint, and also from price action we have, or market structure, we have this swing low right here, been taken out by displacement, price comes back up into that pullback, and then creates another lower low right here. So we have a low, lower low, lower low. So we have 3 lows, and in succession they're lower than the previous, bar the original starting point. Then we have, when we zoom in, and there's a lot of drawings here. We have 49 drawings in this. So if we look at some smaller price action, so we created a low. Normally when you take a low, you end up being bullish. Even if you're in a bearish bias, you can be bullish up until a point to create a turning point. So for example, here we're bearish, create this low, but we still pulled back for a couple of weeks, and then we went to create this new leg. But you need a reason to go down. So we have this fair value gap here. We have this institutional order flow here, because this is a fair value gap also. So we then have price come back up into that area, create swing high. So now we're bearish, right? So from price action, swing high, we created the next candlestick should be bearish, because this high is higher than the candlesticks to either side of it. So this next one is going to be bearish based on that. Then we have this fair value gap. We come up into it, refilled most of it, and now that gives us reason of now reversing. Then we have a sweeping. You can see from this candle, 22nd of June, which is the high 1.14736. So 4736, and this one is 4728. So 3628. That's only 8 pips difference, and that's for a whole week. That's basically the equivalent of equal highs. So equal highs here, and what happened? We swept it, and we swept this day, and this day. So 3 highs we took out with this 1 week, and so not day, week. We took out this week's high, this week's high, this week's high. So we took out 3 weeks worth of highs in 1 week, and 2 of those candlesticks were equal highs. So it's going to be even more liquidity above it. So we create a swing high at that point, sweeping into the fair value gap and sweeping the previous highs. We're bearish. So we're bearish from this day, week, sorry, and then this week, whole week, we're bearish. We saw price move in 3 legs through Monday to Friday last week. We weren't able to capitalize. We could have, looking back and reflecting on it, and we've caught partial move today from this morning. So that was from us not pivoting, but learning from our mistakes last week, how we were able to enter. So we're actually more bearish than we were the week before, because we have extra confidence in that swing high being solidified now. And my targets would be obviously yesterday or last week's low, and then obviously this low all the way down here. Those are my main 2 targets. So if we bring back the drawings, we've marked this off, which is this low right here, which lines up here almost as equal lows. We've marked this low off. So now we can zoom in a little bit, because there is a lot of notes. So this is the weekly fair value gap, the maroon lines are showing the weekly fair value gap. We can actually delete that. We've done that already. We don't need this. This was the sweep. And I'm keeping the drawings for now, because we are doing some kind of research on the past. So we are just looking at the markets backwards. So I'm going to keep the drawings so I can look at it with more context. So that's, and then after I've kind of gathered everything, made notes, I can then start to clean up the charts a bit. Okay, so this is the current high of the week. This is where we opened. Sunday opened here. We pushed up here, and this is the current high of the week. The last week's high was up here. We are still in that bearish move. From here, from about here, where's the first day of the week? From here is the open. We had one move, potentially two, three moves towards the downside that you could have probably got into. And if we have that again, we could potentially reach all the way down here. Anyway, let's focus on why I entered sells and why I'm targeting down here, and then what is the plan for this trade. So we opened here with a market gap. So already we have a target. We are bearish already. We are bearish and we are wanting price to go up first and then come back down. Why? Well, we believe market likes to rebalance market open gaps. So there's a gap here. I'm expecting price to want to fill this area, this zone, this green zone, by this green box right here. And so when price goes up, it's just giving us a target, right? Why? Because this is unfilled in the live markets. So that is our target already formed, but that's not a reason to enter. So let's go over. So we have this 1418 level. ICT said that institutions like the 0.8, the 0.2s, the 0.5s, the flats, like the 000s, etc. They like those levels because it is whole numbers. It's easier for them, etc., to make dealings around those levels. So that is a key area. Plus, it's within this fair value gap, which caused this original move. So we do have a fib from this high. I kind of want to get rid of this, but I kind of need it. Perfect. I'm going to hide some of the past things that kind of overlap in too much. Okay, we'll keep it out. Once I explain it, I'll delete it. Okay. Okay, so from this high to this low, we have this fib. You're going to have to follow my cursor a bit. This is the high right here. This is the low right here. So we drew a fib from the high to the low. And the optimal trade for that whole leg is from 7.9 here, 7.05, 6.2. The far most right Fibonacci retracement tool, right? So the 7.9 to 6.2 level. So price came up into the high of the week, which is in between the 7.9 and 7.05 level, which is this 14818 level here, which is in between optimal trade entry, which is also a fair value gap, also making this in what? ITH. So price shouldn't go above this. So when you have the high of the week, we know based on our stats here that by Monday, basically, it's about almost just below this 2/3 of the time we have a high formed if we're bearish for the week by Monday. So we've seen on multiple occasions price can actually create the high of the week on the actual Sunday. So whilst we're bearish, we've got a reason for being bearish. We can understand and interpret this high of the week as the high of the week that probably will be the high of the week for the rest of the week. Not guaranteed, but it's very likely the odds are in the favor, and the longer time goes on, the higher chance it is of actually being the high of the week. When the odds are not in your favor is when you've got the direction wrong, which is why we spend so much time deducting where the direction of price is going, because we have a lot of assumptions that can rely on that, and it will change everything. Meaning that if we do lose a trade, it should get to the point where if we lose a trade, we got something wrong, and we can then just not trade for the rest of the week. So basically, we always have to win our trades, and when we lose, we stop trading because we made a mistake, and that should be how it is. I'm not at that level yet, but that is kind of what I'm working towards. So that's why I spend a lot of time studying the past markets and learning from ICT. He's the one that's changed kind of the philosophy of my thinking the most. Okay, so we created this high of the week. It lines up with the fair value gap and the institutional psychological level, which is now created this as a swing high, an ITH, and the high of the week. So this is a very strong high, but that's not enough reason to get in. We're just describing things. We zoom in a little bit more. When you're consolidating, generally speaking, you would sweep something before going down. And the place you sweep is the longer you consolidate for, the more equal highs you tend to create. And that's now where we have the area we can target for liquidity sweep. So we actually had equal highs, one high here, one high here. It's not exactly equal, but this was also, I believe, the high of Friday. So it's a daily high. And it also, I mean, there is a bit of difference between this candle's high and this high, but It's a daily high, and then there's a high that created just from market open, which actually respected this 1-4 flat level right here. And then we come back down to this open. I thought price was going to go down. That's kind of why I also entered a little bit the NZD USD. But price displaced up, which means institution took out something. Why did they do this? Because they needed to take liquidity, right? So what liquidity did they take? Well, first of all, they came up to this area. You can see this red line here. Let me explain the red line first. So I drew this red line just predicting what I think will happen. Why? If you look back on when price consolidated, normally you would see a sweep happen before that displacement moved down. So here, we didn't get as strong of a sweep. We would have liked to take out these highs. But what happened is we went up, took out these highs instead, and then we went down. So here we consolidated, we went up, took out this high, didn't take out this one, but this is order block, this is institutional order flow. And then we took out these smaller term highs here, and then we went down. So price coming up, it can either take out these highs, like as we can see, it can take out minor highs, like here. If these were major, these would be minor. And then it could take out major partially and go up for a while afterwards and then come back down. So there's a lot of ways it can come back down, but the idea is the same. It takes liquidity before it goes down. So this red line is me saying that price is going to take out liquidity. I think it want to come up to this optimal trade entry between this 7962 level, which is the fib from this high to this low. I'll think, okay, why did it come up to this optimal trade entry, which is this order block right here, in the optimal trade entry from this range. And on top of that, if price comes up here, which it has, but price comes up here, it also sweeps liquidity, which is this daily high here, which is almost equal highs up here with this 1-4 level. So price came up to this 1-4-1-8 level, which is also the fair value gap, and it's also didn't close above the order block we had on the higher time frame. The higher time frame is a lot cleaner. Get rid of the drawings. You can see here when we came up to this order block, we respected it here. We didn't close above the high once, and on top of that, we wicked above it, but we didn't close. We closed even further below, which means institutions got in around about here. They kind of just summarized the orders. And what's interesting about this wick is that it didn't just go above this order block for no reason. It went into this fair value gap right here. So it's all within reason. The context matters. So although it wicked above the order block, it doesn't invalidate the order block. So we still retrace from here, which is, again, reiterating the optimal trade entry of the range from this high to this low. Okay, so that's where we should expect price turning, but that's not enough. This is just enough to trigger us to start looking for entries. So once that's all happened, we then start looking for entries. So what does that mean? So I'm looking for entries. What am I looking for? Displacement. Where institutions get involved? Are they confirming their interest, etc., etc.? Well, we're taking up this place here. We're creating, remember, bullishness, creating these high highs, high lows, which is good. That's perfect. We want to see people going in the wrong direction because it allows us to take them out, and that's what institutions are going to see. People that would happily accept their sell orders, buyers. If you want to sell something, you need people to buy it from you, don't you? So anyway, we take our liquidity, and we did get displacement here, but this is last week Sunday, so it doesn't matter. Well, no, not last week Sunday. This is this Sunday. So if you would have gotten here, it's not the best. No, it's not even in displacement. I mean, that's too small for me personally. But displacement on its own is not a problem. It's not like something cool. It has to take out like a very valid swing low. So if I zoom in a little bit more, you can see there's not even a fair value gap here. Yeah, there's no clean fair value gap. Maybe here, but if you had got in here, right, what would have happened? You would have been taken out, even if you had a good stop loss, which would have been for me around about here. So I would have been taken out over here, which remember, that is the liquidity sweep. So we had the liquidity sweep of this daily high here, which is from last week Friday, that high there, which we said is almost equal to this 1-4 level. Price came above that. That is one part of liquidity, but you can always take more liquidity, right? And there would have been liquidity above here during the Asia session. I would have been asleep here anyway. So we got in during the London session where liquidity is better. So we took that high out, and there you can see this is better displacement. So you have your first entry or the zone you can look for here. You can even see I draw a high Fibonacci retracement from the high from here to the low here. And we see the pullback into this range, this orange box, which is actually why we got in, because we were meant to get in here, but because we're close to it, we didn't mind the extra pips. The best entry would have been here, but we couldn't get in because we missed it. But we got, okay, you know what? We're right next to where we would have got in. Let's just enter. So we got in of this area here. And this, I believe, is a larger time frame fair value gap for the 15-minute. The only fair value gap on the 15 minute, the first fair value gap on the 15 minute is right here. The area which we could have got in above here is a 5 minute fair value gap, but there was no retracement into that area anyway. And I think this is like a 0.001 pip difference. Let me double check. High is 0.98. 0.98. So it's actually equal high. So technically it could have got in, but like I said, I missed it. Yeah, I was asleep. So price came up to this fair value up on the 15 minute time frame, touched it here. It was close to it, so I was willing to enter, but I made sure I didn't make the same mistake as I made on NZD USD, where we would have where we had a tight stop loss and we could have still been in this trade if we didn't fumble that. So what's to note? Well, to note is on the NZDU, we had a tight stop loss above the order block. This time around, we have the fair value gap on the 15 minute time frame. The first candlestick contributing is this black one here, and we just added a couple pips above it, and it's EU, so the spreads are not that high. So we can just add the spread or the extra pips that we feel was necessary, which is like 1 to 2 pips. So that's what got this entry, and then we targeted the low of this consolidation, and then we have liquidity just below it. So I just was like, might as well target the liquidity. So remember the target we birthed at the open, which was this green box here. This green box is an area of a market gap, which is where price wants to go to rebalance. So that was our target. We had the target set. I mean, if I saw this happen, but there was no target, it would be very difficult for me to get in. But to not have a target is very difficult to even have anyway. It just helps you keep disciplined, helps you understand where you need to take partials, helps you understand where you should come out fully of your trade, even if price goes beyond there. For example, there was a buy we took last week and price absolutely went like tripled further than where I was entering. So on Telegram here was an NZDU buy against the overall trend. So it was like a counter trend trade. And our top loss was just this liquidity here. There was another high somewhere to the left. But price literally, you see that grey box? Remember that grey box? Here, in fact, it still had the markings, which is good. We entered the buy from here to here. And guess what? Price went all the way up here. Which is this, to be fair, this is actually the creation of liquidity. But 1 to 5, but we took and secured the 1 to 1.4. And that's only because of spread. It was meant to be like a 1 to 3, I think. If we got in here, but we spread it, took it to 1.14. So every which way, you can see that my target was here, so I took out my trade here. Like I said, there was one more high here. Remember on the Telegram, just to show you, this is how you guys know I'm not lying, because literally everything's lined up. There's only 2 highs here, and there's a high to the left of it. It says 1, 2. What do I see? 1, 2, 1 high to the left of it. I remember this clearly. So we took the buy, targeting this area as equal highs, and it was only 5 minutes. So I was like, if it's a 5 minute trade, I've got to have a 5 minute target. And then price ended up going up further, which is fine, but I was happy even with the profits I secured. So back to EU. So that's why we got into this trade. So I explained that. So that's all explained. And yeah, my target is explained. So now what are we at? So now we have to decide where we're going to take partials. What's our target? Why is our target the target? And kind of look at this from multiple different perspectives. So you can definitely see that this is institution. Normally when this happens, you can see when we sweep and then come back down, we created the distance of the height of these boxes is almost the same. So the first consolidation is at 14 pips. Second consolidation is 29 pips. Third consolidation is 28 pips. There's only 1 pip difference. Third consolidation is 31 pips. So it's about 30 pip difference in distance between each one. So if we were to transpose that from here to here, even if worst case scenario was 27 pips, it would be basically this 138 level right here. It would even be lower than this, but just as the key area closest to it would be this 3 level. So in theory, we should be targeting here, which is a 1 to 5. Now, like I said, this consolidated at this area. It doesn't mean price went there initially. It consolidated within this range. So we've taken out this low already, pulled back. It looks like we want to continue that. We're very bearish on the higher time frames. You can see the big candlesticks. It's just strongly bearish right now. Excuse me. And we have, to be fair, I probably wouldn't hold it this far because we do have this liquidity. If I'm going to let it go to this 1.8 level, or if I want to target proper liquidity at this 1.3245 level, which I'm actually going to push up to 0.5 because that's more institutional like, I will then take partials for sure over here. So set an alert here and an alert above price. It's possible price retest this low and continues on its downward trend. In that instance, I would like to know, and then I'll make a decision if anything changes. But the idea for now is our overall target is here. We want to take partials at this 13617 level, and then let's by partials I mean at least 50% of the trade, ideally 80-70%. How much partials I take depends mostly on how I've been trading. If I'm up a lot, I'm gonna just take most of my trade out here. Let the lower ones run out, and then as you continue to build skill wise, then you can start letting trades run out a bit more confidently. But I like securing profits. Let me just edit my TP so it doesn't take me out too early. Okay, I've set that now. So that's all set. So we're gonna keep that an active trade. We're gonna keep monitoring this. Got the alert set. So when you have your alert set, your alert should be that you don't need to look at it again. So we can come off EU. Why? Because we have our alert set. We're in the trade. We've set our thing. We can even set it to break even. I'm not going to right now, but we could secure, make sure everything's safe, whatnot. And then obviously keep an eye on anything that's important, whether it's time or price. Price is area. So if it comes up to the previous low high, sorry, let me just explain this really quickly. If it comes up to this previous low right here, I would like to know, see if we can ever get into re-entries, or if it looks like price was to reverse. And then I also want to know if it gets close to our first take profits, so I can know to start looking for taking partials. So those are two things that I've highlighted. And what's in relation to price? When price gets up here or price gets down here, I would like to know. If there was news, or maybe it was like an open or something like this, like New York Open, or the New York afternoon session open, or lunchtime, time-wise, then I was also setting an alert. But I have that on my phone. I wouldn't set an alert on TradingView. And so I'll look at the markets and come back to look at EU again at the time, or if price, whichever one hits first. Cool. So that's EU done. I'm going to have that bias for the whole week. So in theory, you could actually hold this for the whole week. I'm not personally going to do that. That's not the style of trading I'm in. And we're seeing the same thing kind of play out in GU. I'm going to kind of look at this just to see. I was going to go back over GU and look at what made the third move happen. But I think I might skip that today and go straight into the video instead. Just because we do have a live trade and I'm not really trying to go back on it. Let me just double check. So here we had the recap week. I would like to finish it though, so I can get let's finish it. We're gonna finish this EU analysis, try and analyze why price went down, and then we'll go from there into the video, which is loaded up for us. Okay, I'm just to take a little break. So we've been going for 35 minutes. I want to, generally speaking, take a 5-minute break every 30 minutes. So just bear with me. Solve some puzzles first. I've done it already. Last night I did it. Also, you can see at the top, I'm building 2 new tools. Something for fantasy football, and then something for at Sea Edge. I haven't touched at Sea Edge in a minute because I was to focus on studying. But I need to expand again because I need the tools now. It's like it's coming up to a need. Forza 1, now I need it. Take a couple more minutes. End game. pawns. My king up here. And he will mess up. Draw. Oh my gosh. I can't believe I drew that. That's so annoying. Okay. I like doing this against my own strategy. I could have gone here, to be fair. Okay, that's gone up to the low. Oh no, what am I doing? Sailing right now, dude. Let's go. Takes. I don't know if this is worth it or not. That's a good move. Let's go here. We take with check. Okay. Let's go. We kind of have to take this. And then this. No. Took way too long. Looks like he's dropping a bit again. Don't get that move. Oh, I see. Oh, have to be careful here. Let's go here. Can go here. Oh, that's bad because he can just take. Excuse me. Let's go here. Let's finish this. Let's go here. So. Let's check first. And then we go and move the knight. And then pin him to the pawn. Should have need to do that. Let's then go here. Can't take. I guess he can technically. Okay. Oh my! Why am I taking so long? One more. That was a terrible. I don't know what I was doing. So like a. Hey, it's back to work. Yeah, coming up back to this high-ish. There's also a fair value up here too. Get up to it. Should be good to continue. All right, let's go over the last consolidation area, which is this block here. We are yet to analyze. So we consolidate. Let me just go over the notes for the previous consolidations. So we started off by calling EURUSD recap week 15/7/26, which would be all the way over here. So what caused price to move out of consolidation? What were some observations we can make? So the first bullet point we took is that we took out liquidity with huge displacement, which is over here. We took out liquidity, which is this area here and this area here by 15 pips, I think it was. Double check that. But I did I get 15 pips from? That's 2 pips. Something else I'm mixing up with. So we took out about 2 pips. Oh, it says 18 pips here on my notebook. Maybe, oh, I'm talking about this, maybe. Because this is also maroon, which could be. No, because that's 8 pips. I don't know what I mean by 18 pips. But anyway, we took out a weekly time frame, I see. This high is 608. I don't know. I'll be real. I don't know. But anyway, we took out liquidity with a huge displacement. As you can see, this displacement here is huge in comparison to other displacements and other candlesticks. And the high is that we took out was in the fair value gap. On the weekly time frame. That's the first thing. Then we consolidate, and we're consolidating in between a 50-minute fair value gap, which is here, but it's locked clean on the 50-minute right here. And we'll also consolidate between that and a bullish candlestick, which is right here. And then that bullish candlestick could be called an order block because there is a displacement following suit. So there was 3 fair value gaps below in succession. So we have 1, 2, 3 below the one was consolidating. So we're consolidating between the uppermost fair value gap on the 50-minute time frame and that bullish order block that we created here. So those are the 2 boundaries was keeping in check. So we formed during bearish displacement. Oh, I think I'm talking about the bullish candle. Yeah, the bullish candlestick was formed. Got to do this so it's clearer. And one candlestick before. What time frame is that as well? So the order block was formed by displacement one candlestick before and after 5-minute time frame. And then we had, yeah, the order block is mentioned again. Cool. So that's what we did, consolidating between the order block and the fair value gap. Here we say price never once closed above. Only one wicked above, which is liquidity sweep, except by not to. Okay, so basically what I'm saying is this order block right here, which is blue candlestick, we never closed above it, except there was this candlestick, this green candlestick here, has a high of 745, and this I believe is 744, 738. No, sorry, the high is 738 and the close is 738. So they're not the same. What's the close here? 37. There's one below. So I can change that to never once they close above. So the high, sorry, is 738. Close 737, 738 is equal. Yeah, I can cross that out. Only 1 wick above, which was here. And this is a liquidity sweep because this is equal highs on a 50-minute time frame. So that's fine. Then price free tested the high end and it created equal highs in the process. High end of consolidation. And this happened here. We retested it here. And it's the high end. And that was what I mentioned here. And price sweeps minor equal highs plus small displacement down afterwards. So we have this here, small displacement. And we fill it right afterwards right here. And we create equal highs. As you can see with this green line. Then price goes all the way to the lower bound. And price sweeps these minor equal highs we created. And then after we sweep those minor equal highs we created, we have a small displacement down, which is right here. Oh, sorry, right here. Maybe on 5 it might be cleaner. Yeah, we have a small one here. After we see the highs, that will be entry. Price didn't come up to it, to be fair. And then yeah, you have order block created, another sweep. Not really a displacement here, but then maybe one here. But you maybe wouldn't have been able to get into this one as cleanly. Maybe on the 1 minute, 3 minute, you might have been able to find something. Why does it go all the way to current time? Fair value gap, nothing come up. Fair value gap here was inverse fair value gap. Price comes up to that. Goes below, come up to inverse fair value gap. We drop. What's the fair value gap here? So on the 3 minute, we got the first entry. So then we take sell side liquidity, which was equal loads in the fair value gap. So the fair value gap is here, is equal loads here. We take that out, as you can see with here. And then price returns to take small high ITH LQ from fair value gap mentioned above. 3 equal highs were present. I think I'm talking about this again. Then we shift downwards into a new range of consolidation, which is just describing this whole move here. And partial distribution move started at 8 o'clock, which lines up correctly. And New York time on Thursday, there was obvious displacement, which is obvious here. And we even compound, or compared to prior ones, it's bigger. Even compared to prior ones, it's bigger. So I think I'm talking about one of these displacements somewhere. Price fills mostly the fair value gap next candle. What? Now I'm lost. I'm not exactly sure. I think it's here I'm talking about. And then we see price come back down. It distributes to this order block and this order block here. The first order block, which is right here. The low is right here. Bam. We come just below it. Return back into that range. And then we continue down and distribute again to this order block, which is low is right here. Come back up from this range. Bam. Another entry. Continued. And then delivered to this order block over here. So the first one was delivered to this first order block here, which is around 12 New York time Thursday, and the second order block was 6:30 that same day. Or no, 6:30 the next day. Sorry, being 6:30. Cool. Here we have a second consolidation. Excuse me, which is what was noted here. Hopefully, this is a little bit clearer to read. Oh, we didn't finish this. So order block created at 9 to 9:15 here, and the same thing just on Thursday and Wednesday. So this is Thursday. Why Wednesday though? Oh, I see this order block here. So this order block and this order block, that's where we consolidated. We never closed above 0.5 and 0.62 level on the fib of the upper order block. So the order block should have its own. Okay, so yeah, order block is this here, and we never close above this 0.5 level here, and we never do, literally. Okay, but we come up to the body closes below that 6.2 level. Okay, and we retest it again the following day with the wick. So after this though, let's go in order. We displace to the lower bound, or we displace to, look, this could have been another entry right from here to here. Because you come up to a 705 level, and then you just be downwards to the next order block. So I'll write this one down. We maybe some Oreos. I haven't eaten yet today. I'll eat after stream. So I just thought of something I want to do. So this range here from the order block, from the order block to from order block to order block. So interestingly, from the place that is consolidating in between, we drew a fib. No, it wouldn't be that. It would be the low from the first order block. So order block to order block though. So how do I determine this? So first order block target. So with order block created between the previous partial distributing order block. Created in the previous partial distribution, sorry. Okay, we have at least another hour together, yay. Created in the previous partial distribution. And then the first target order block rejection. So what I'm gathering, let me just make this now first of all. Reaches the optimal trade entry. Okay, so what I'm gathering is that when you have a distribution, the best high and low to use are the ones that have occurred after a key area. So have occurred or have been created from something that we look to in terms of reading price action. For example, price can consolidate between the order block high, or high that we created, which is also the high next to the order block, which is right here, the swing high here, and it could be a swing low that is created after rejection off of another order block. So the swing highs would have been created from a reaction to a key level. So that's my early hypothesis of the first homework, which is to find daily ranges and see which ones are respected and which ones are not. So the ones that are respected, I think, are the ones that are swing highs and lows from a reaction created from a reaction to a key level. This is not just an order block swing high, it's also a reaction to price coming up to the bottom of the consolidation range. Lines up with does not exactly there, but the lower this order block. So this order block created from actually encountering another order block. This order block here, price goes down, comes back up to this order block here again, and then comes back down from that high to this low, which is this reaction to this, or swing low created from the reaction to the first order block. It has a dealing range, price comes up to that 7 optimal trade entry of this, and it distributes even lower. And what happens, it distributes to another order block. So we've written down that we then have a pullback into a new dealing range, which is the parameters, I should say, which parameters is of the order block created in previous partial distribution, which was referring to this partial distribution here. This is the order block here, swing high, and we put that in brackets. And first target order block, which is this rejection swing low. So rejected basically this order block here and created a swing low. From that to that, we then pull back up into that range, ultimate trend entry, bam. That's a good observation, I think. Cool. So that's the move. Maybe I'm making further notes by saying price is volatile. So it actually takes some liquidity as well. I'm going to make a note of that because this is like mid liquidity and I don't see any session highs taken. We say we have a bullish displacement upwards into OTE. Never closing above 145 level. Or above, sorry, above 1.45. Price is volatile. Price is volatile. Distributes takeouts, major low, major swing low. Displaces, takes out. I'm going to put in brackets for price, then volatile. I'm going to put hesitation because it doesn't go down exactly. And then we have price displaces, takes out, major swing low. So maybe that could be a factor when price is dilly-dallying. We would wait for it to take out a major swing low rather than a minor one. So price displaces takes out major swing low. I'm just going to put major meaning isolated and clear. Perfect. And then one more note on that, price reaches second order block. Cool. Then we get a reaction from there. A false moves upwards, close of the day. Then Friday. Okay, so then new week. We are still in consolidation range. New week, we are still in the consolidation range. Price displaces up, takes out major high, reaches price market gap downwards. Put that note down. I'm going to call it bearish rather than downwards. Okay, and then we also have, we create equal lows here as well. And we displace taking our swing highs more in the time frame. Take a lower time frame high, and we reach let's see what time frame. What's wrong? Sorry. What was I looking? Here. So reaches 1445 level. Small displacement downwards, big displacement. Revisiting the 1.145. This is the 145, and that is this order block. So it's the order block of partial distribution. Plus the 706. Wait, what? I think it's upside down. Oh, it's the order block. It is upside down, but it reaches the what is this? This is the between 70562 level, the range. So I'm gonna say that instead. Price and distribution to the 1.402 level. Take this low here, push back up to order block, went down. Order block plus the fair value I've created. Price returns to order block and uses that to exit consolidation. That gives us all the way down over here. Okay, third and final consolidation box. So after price reaches this, we retest the bottom. Of previous consolidation box. or range. Plus the order block plus fair value gap that is just above it. Which is this area here. You can see the order block here, then the fair value gap. So over here. Technically this one got rebalanced. So we actually sweep the ITH. We can know that. On the 50-minute time frame. Sweep it, close below, come back up, sweep again, bam, equal highs here, which is the high range, which is the equal highs of black is Asia session highs. Interesting, eh? It's not just an ITH, it's also equal highs with this Asia session high here, and we swept that. So we didn't just sweep the ITH, we swept the ITH alongside equal highs, and that's what then fueled, and we displaced instantly. And we create an entry instantly as price returns within the next two candles back into that fair value gap. And then we can price continues to 1395 level. Sweeping the 1.14. Then we steadily move up into the order block that we retested earlier. Okay, let's describe this. So we move up steadily to this. Make this, and then we're gonna say, so it moves up steadily initially, and then bam, it displaces downwards to 146. Doesn't reach one, doesn't reach 145, 146, and then boom. I'm gonna say small / medium displacement. And then comparison. So displaces small / medium displacement in comparison down to 1406 level. Taking out swing low, small time frame. swing low small time frame, and then displace up smaller, then we displace up. Right, we displace up here, it's very small. Filling bearish fair value gap. After fill, larger displacement. To order block mentioned one before. And we can take order up. Never closing above order block. Also height upper bound of consolidation and never close above. But even a wick. Then we can say and then we can say here, then we create a 5-minute entry. Largest distribution. About 70 pips. With 5-minute entry. This was a 1:17 gross total ratio. Bam. And then we'll go over this another time because towards the end I was rushing a bit. Okay, we finished this. I wanted to take no longer than 30 minutes, so it's 1 hour and a half stream now. 30 more minutes, and then we'll look at ending so I can eat and get ready because I'll make it 4:30. I leave at 6, an hour and a half. We might be able to push it to 5, we'll see. So that's this now officially done. I'll still keep it up just so I can go back over it for just making sure that I can get details because I didn't detail towards the end. I just kind of describe what was happening. Okay, so that was the Euro USD continuation of moving from consolidation into move, what was the cause, etc. Have a quick look at live. Okay, so we're now currently at the bottom of this first initial target, and the way price looks, I don't mind holding all of my trade further downwards. And it will take this out. I'm assuming equal lows here as well. Taking this out is, I think, quite logical. Once I take this out, we'll take some partials, and then I can then start looking to let the rest run here. I might take out most, maybe like 2/3 of the trade. Maybe even all, we'll see. Also notice NZD, USD, and TU dropping. These ones went below. This one went below the box drawn. It's almost at this area here. G also went below the box drawn and went to these equal lows right here. So EU is the only one that's actually behind because we're just about filling this box. So taking down, if it does the same thing as others, taking out these lows and then hitting this area here of equal lows or previous liquidity, then that makes some sense too. This overall is a 1 to 6. This reaching here is a 1 to what? Why is my entry order up here? I'm missing something. And then price reaching the first target is a 1 to 3, 4-ish. And then price reaching the second target is going to be the potential 1 to 7.6. And then obviously if it reaches this orange area, it's 1 to 6. So it's a big difference. I would just probably take partials just to keep it simple. So that's USD. I'm going to quickly scan in the other pairs. Okay, USD CAD, I mean it's USD as well, but on the weekly, we swept this, came up, and into this fair value gap, pushed back up into this fair value gap, which though I don't know if how much of a fair value gap that is. Okay, it is in the daily, came up to it. So we are coming up onto this order block. If we're bearish, you should expect some ideas of sells. You can see that this first order block people sold, but it wasn't institution, and price took out liquidity. The sellers that sold, probably targeting here, got taken out. So price coming up a bit deeper. We'll see how it operates when it interacts with these ones up here. USD is also bullish, so it actually lines up. It's like, if you look at this and you look at DXY, it's almost as if it's saying it's going to reach this swing high right here and then reverse. Because in USD, that swing high will be up here, somewhere in the midst of this order block. So if we reach DXY here and come back down, it would go with the idea here. This can be bullish up into these fair value gaps up here. I think that's plausible. Kind of looks good though. Took some buy side liquidity, used that to displace downwards, came up into this fair value up here, and you see the high time frame. Respected the 5445 level. Swing low looks to be created. Dipped into this fair value gap here. Displacing upwards. The only kind of thing about this is probably going to be the idea that, so these ones need to go. We don't really have a clean liquidity sweep funding the push, just to pull back into this area here. There's no liquidity. The only liquidity is we swept this high over here. This is equal highs over here, equal lows, sorry, over here. And we just dipped into this fair value gap. Looks like we're pushing up. So I would actually be bearish. I'm gonna lie. I'd rather sell here. Or if I'm gonna be bullish, I have to wait for price to come deeper. Maybe take this out first. Cool. There's also news for tomorrow. We have AUD USD. So what does that look like? Ugh. I don't like this. We're gonna keep our mind clear and we're gonna just leave this That's the only trade we're gonna look at for today. So yeah, we'll manage this. It shouldn't go above this anymore. So I might invest in my stop loss to 3775. Let the trade run a bit. Whatever. Cool. So that's the live markets. Done. We can now do the video. What's the time? I'll have a quick break and then we'll watch a portion of the video. Okay, stop selling the 1 minute. Keep selling by run out of time. We do that. Please take with his bishop. Maybe his rook. Okay, I forgot to take that. Okay, I only have seconds. Oops. Oh no, so close. That would have been tough to be fair. Could play on this, I guess. have a plan. I think this combined with this, sorry, this, and then build a road and get this. So I have these two trees, this wheat, this coal, this sheep, and this sheep. It's better than if I go here, he'll be able to take me out because he can go here and he'll need tree and coal, which is someone like here, get this place, takes me out, or he can even go towards the sheep to get the 2-to-1 more efficient. So I think this is why this is better. And then it pairs nicely with this. If he goes here, he would need, you can go here and here. Well, that's actually not bad. So he takes the only tree and brick, meaning that he can definitely get that. We call any tree and brick. There's no other tree and brick. But from the place he went. So we're gonna have to double up on the sheep wheat coal. The sheep wheat here. And then we can go this way. Free coal, and then we can use the sheep to get brick. Which I think is good. I can go here, block him off, double up my coal. But sheep wheat is weak. I think we have to double up on this. Kind of have to get this. Is that 11 twice? I can't believe it. He just did that as well. I need to get brick. He has 2 tree. Won't be able to block me off. Go here. Really? Oh, I could have used that to get brick. What am I doing? Do a 3-to-1. Now we need to get this brick down here. Tree port is here as well. Let's go down first. We'll need to double up actually. I think that's probably better. It's gonna be tough though because he has everything. There's no sheep. Let's take it. We have a 3-to-1 as well. So we can use this to get this. There's been more 11s than 4s, I think. Yo, what's going on with the 3s and 11s? Like, are we dead ass? I need to get here, but I don't want to show my cards yet. My hand, rather. Okay, here's a little brick. I can't have a 5 roll. This like dangerous. Brother. The fact that 5 rolled is insane. Okay, that's good. I can rob him back. Please take a sheep. And I need him to go to F3 and 4. We're losing this, by the way, just for reference. But we took 5 already. Likelihood it gets rolled again. Let's go 6. Okay, can rob this as well. Okay, we need brick. No, we need Don't worry, 7. We need. Oh my gosh, man. GG. It's game over. I'm just gonna resign. Save us some time. That just annoyed me. That didn't help. That annoyed me.
ICT Asian range. It's just it's multi. It's my Asian range barriers like we're seeing here, the upward and lower for New York. All I did was change the time parameters to encapsulate the specific New York and London sessions. Okay, so if I do pass over and you see these little boxes popping up and you're wondering what it's saying, or if you catch it and it says that, don't be confused. It's simply because I'm using the indicator itself that I named.
What's so interesting that this episode just gave us the answers to questions we had. So I just realized I've made in my notes how to use kill zones. We can look for pullbacks in a bullish trend during kill zones. The swing highs and lows are important during kill zones and can be used for fib retracement levels, which literally answers the question of which ones or which ranges can we use and which ones can't we, and which ones can we use and which ones can't we use, and what makes up the ones that we can use. Swing highs and lows during kill zone sessions. And the weekend gap is still a skill range, it's still a range, even though there may not be liquidity.
ICT Asian range. It's just it's multi useful. Okay, you can use it for different things as we're showing here. Now this day here is Monday on the 9th. Okay, now that was the date that we released the previous installment in the series. This is the Tuesday. Okay, and now what we're going to talk about is how we use these sessions. Okay, with the understanding of expectancy moving higher in price. Okay, there's highs and lows within these time windows. Okay, we have the low, we have a high, and in between there, okay, any swing high or low is useful. This one here, okay. Inside the New York session, okay, we have a low here and we have a high here, okay. And on the following day, on this Tuesday, this was September 10th, we have the range from here to here for the London session, and the New York session is here, okay. So inside of that, you can see that there's swing highs and swing lows that are useful as well. By understanding that, okay, and understanding the concept of the range or previous day's range or session ranges, okay, that being here's the previous New York session range. This is a low in here, okay, and what we'll do is we're going to highlight an opportunity that could have presented itself to you as a trader from that low to the high, okay, and I'm going to move over here. You can see how price moved down into the optimal trade entry area here, which is between the 62 and 79 cent retracement levels, respectively. It went right down to the sweet spot, which is essentially the 70.5 Fibonacci level, okay, 70.5. You'll have to set your platform up, if it's not MT4, your own way. I don't know how to do what platform you're using, and I really would rather avoid going through a long list of possible emails saying, what can you help me do with this platform? I'm pretty much limited to just using, what we have here, okay, MT4, because I don't want to get into a long-winded explanation of what possible platforms you could be using, and then we get into a conversation of which one I advise over that. So I use a very generic one, MT4. Okay, that way everybody's readily accessible. It's free, it doesn't cost you anything, and it's pretty much universal. And then you can delve into other platforms where you see its usefulness. So we did deviate outside of that range here, okay, by the defined terms of the ICT kill zones for this series. Now understand there's small variances in the times that I'm using for this one and the ones that I use for my own trading. So please don't take that comment and say, well, look at this, he's not even teaching what he uses. I took a lot of time to eliminate a lot of the stumbling blocks that I see in email form, okay, because over the last 3.5 years, I have been inundated with reoccurring questions about what time window is this, and what would that be in my time frame or my global position around the planet. And I readily admit it's a very confusing topic for me. Okay, so I understand it's confusing for other people, and as a mentor, that's one of my weak points, communicating that effectively. Okay, and to eliminate that, I just simply gave you a very generic time window for London and New York sessions. And if you hunt during those time windows, you'll find more than enough opportunities. Okay, and none of my tools are going to give you every single trade. Okay, you could probably go back in hindsight and find where it was useful to you, okay? But don't have such high demand on these tools expecting you to get every single high and low, every single movement in the marketplace, okay? That's not what I'm teaching. That's not what I'm promising you. I'm promising you an edge. That's it, okay? So how you tweak that edge and how you use that edge is completely and utterly up to how you employ and work at it, okay? So on Tuesday, we saw the market make a significant low here and then rally up. Okay, and going into that Wednesday of that week, we saw price move down, making a low in London, okay, in the London kill zone when it would be reasonably expected to form. Okay, and you could take the low from the previous day up to the highest high prior to it moving into the London session. Okay, because what you're doing is you're looking for that retracement back inside of the range. Okay, and again, we see the low to the highest high here prior to it moving into the London session. Okay, price comes right down into, again, the optimal trade entry region, and price rallies up. Okay, if you initially missed that opportunity, it gives you another opportunity to catch a ride on this move up in the form of this pullback here. So you could use this swing low, and again, let me take this off because we're already getting busy. You could use this swing low to this swing high in London, and you'll get this right in here as a retracement. Okay, and don't be thrown off also with the breaks between, again, let me show you here, the time between the London kill zone here and here. There's an overlapping between these two sessions that is very busy. Okay, there's a small little period around 5 a.m. New York time or 10 GMT where you may catch a little bit of a pause or a breather. That's not guaranteed to happen always. Many times you'll see prices continue on blow through that time pocket of 10 a.m. till 11 GMT. It would be foolish of me to advise you to always expect it to be a little pause in here, but you can reasonably expect it. Treat it like a lunch. Okay, where there's a small little consolidation and all of a sudden it'll take off in the trend direction that's established by the London session. Okay, so we have a low forming here on this day. Again, looking for retracements to buy off of. This was one, this one in here. And then you have one in the New York session here as well. You can take this swing low and to this high here. Okay, and the 62% trace line, it may be a little difficult to see, so I'll do my best to draw a little bit tighter to see that. The 62% trace line lays right on top of that line that delineates the New York session beginning, at least the boundary about time, and then price rallied on up. I actually took this trade, okay, so it's not like it's something that's purely hindsight, and if I'm questioned or whatever, I can show you documentation about the trade. Okay, if you initially missed that opportunity, it gives you another opportunity to catch a ride on this move up in the form of this pullback here. So you could use this swing low, and again, let me take this off because we're already getting busy. You could use this swing low to this swing high in London, and you'll get this right in here as a retracement. Okay, and don't be thrown off also with the breaks between, again, let me show you here, the time between the London kill zone here and here. There's an overlapping between these two sessions that is very busy. Okay, there's a small little period around 5 a.m. New York time or 10 GMT where you may catch a little bit of a pause or a breather. That's not guaranteed to happen always. Many times you'll see prices continue on blow through that time pocket of 10 a.m. till 11 GMT. It would be foolish of me to advise you to always expect it to be a little pause in here, but you can reasonably expect it. Treat it like a lunch. Okay, where there's a small little consolidation and all of a sudden it'll take off in the trend direction that's established by the London session. Okay, so we have a low forming here on this day. Again, looking for retracements to buy off of. This was one, this one in here. And then you have one in the New York session here as well. You can take this swing low and to this high here. Okay, and the 62% trace line, it may be a little difficult to see.
I want to kind of look at this idea again. So swing low, swing high. To be fair, this is like the end of the market. I would never take a trade like here anyway. So swing. Also want it here and here. 62 level drop. It's a random pair. Level random pair, like literally random. I'm gonna go down 24 times. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24. Okay, let's pick random ones. Go from this low to this high. 50-minute mark. price had to this low, maybe almost to the 60 level. Came to 7.9 level, dropped, pulled back up here, and dropped again. Interesting.
So I'll do my best to draw a little bit tighter to see that. The 62% retracement level lays right on top of that line that delineates the New York session at the beginning, at least the boundary about time, and then price rallied on up. I actually took this trade, okay, so it's not like it's something that's purely hindsight, and if I'm questioned or whatever, I can show you documentation about the trade and the actual real results, not a demo trade. And the opportunity to continue moving higher in intraday in here also was available, and you could have caught some further upside as well. But that's outside the scope of this teaching and this this presentation. Again, moving into, let's go out one more. Right in here, okay. This was that move we were discussing, and here we have the range from the previous day's low up to the highest high, okay, right here, prior to moving into London and New York. Okay, here's New York down here. You can see how price moved to the 79 cent retracement level, okay? And we're going to talk about why this may not have been a good idea to trade, okay, looking for a long, because of something going on over here, okay? But that's later on in the video, guys. I know. Teaser, teaser. Price rallies up in here. Okay, nice opportunity, okay, just to be a buyer, specifically looking to catch longs. Okay, the range available was 68 pips. You could reasonably expect to get 30 pips out of that. Okay, there's absolutely no reason why one couldn't have taken 20 to 30 pips comfortably out of that move, even with it retracing and returning back into this this range here. We have a low here. Okay, we have a low in here formed, and using that to the high formed right here. Okay, price comes down, deviates the 79 cent retracement briefly, just briefly. Okay, and then gave you a tradable rally in here to the tune of about 25 pips. There's nothing wrong with that. And if you consider the overall range of this price swing from here up to the high, and as it retraces, we had the 79 here and the 70.5 level here, respectively. And then look what come down one more time, found the 79 cent retracement level as well, one more time, bouncing off it like we did here. Just violated this low just by a little bit. You see that? If price does that, it's usually a precursor to something pretty significant. And you can see how clean these highs up here were, so you can imagine what was resting above that. You can see that was the case here. They took out all the stops with that huge weekend gap, blowing out all these highs that were way too clean. And that's classic ICT work there. You can see the results of why I say when levels are too clean, that you can expect a pocket of stops sitting up there, and they will gun those bad boys out. And they did a handsome job of it that week, okay? And price moved again on Monday. Small little rally here in the London session going into New York, okay, before a retracement deeper. Okay, now let's look at something, okay? And it's a very cool technique, and I dubbed it an hidden optimal trade entry. And for those that aren't real fans of my work, they find it rather silly to suggest that something might be hidden and therefore be useful. But it's really not more than simply looking at an idea of support and resistance, okay, which is what we have here. I think it would be hard-pressed to find anyone that would really fight this as being a discernible level of resistance, okay? We saw it bounce up here, 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 okay? And if price was to get back above it, as we see here, we would expect it to be what? Support, right? So we would have a role reversal, if you will, okay? But simply because it's an expected level of resistance here, it may not come back down to that level anytime soon, but it still is useful to us as a point of reference, because between that level and where price opened up and rallied up to here, okay, that is a range. This right here, this point here from this candle's low to this candle's close here, this is a gap. Now, while there was no trading there, okay, you have to understand that this is still a range. Okay, that's a range. There's just simply no trading between this price point of the close of the previous Friday and the opening on Sunday. There's no trading in there. It's all, the liquidity is none, zero, okay? But because price is trading here, you still have to consider that as range, okay? It just means that there's gaps in between these two price points. And usually the market finds a way to fill those gaps, but not right away sometimes, okay? So what that understanding is, with this gap or without this gap, if you ever see a discernible level like this, okay, where clear resistance and support resides, if you take your fib and anchor it right from that price point, and you rally it off that, take it up to the highest high, okay? When price retraces, basically what you're saying is it's retracing into this range. Gaps don't have to fill also, okay? I've seen many times where gaps stayed unfulfilled, for years. And that was in commodity markets, that was in stock indices, okay? Just simply because the gap doesn't mean necessarily that it's going to fill. It doesn't mean this is a common gap, if you will, Okay, common gaps usually get filled relatively quick. This could be a breakaway gap where it necessarily isn't always going to be filled. Especially if you have a long-term, monthly, yearly trend underway. Who says it's going to have to go all the way back down to that gap? Okay, this just shows there's a huge influx of buying. Okay, on an institutional level. So therefore, we still have to consider this as a range, and then price comes right down to 70.5, and then rallies off of it and gives you what? An opportunity to trade to where? An old high. Okay, so just simply looking at support and resistance and using Fibonacci alone is useful. Okay, and there's 40 pips made available to someone that would just simply understand that concept and work with it. Okay, it doesn't mean you would hold on to it and expect the moon. It just gives you an opportunity to trade. Okay, and there's a trading pattern in this that we're not going to discuss. It's been previously released by me on the internet, but that's for another time, another topic. But again, we have this low in here. Okay, that was an opportunity to catch a short-term little pop in the market. Again, focusing only being a bull. We have price moving into a larger consolidation. Okay, we do have an opportunity to see like this low here to this high. This is an opportunity here where you could potentially look to be a buyer in here. Okay, but with this gap like it is here, it's a lot of uncertainty where it may try to reach that. You could be a buyer here, and let's assuming that was the case. Price was able to move up strongly.
Cool. We're gonna end it just because mind is full. Oh, we just looked at it. We just been streaming for 2 hours as well, so it's the perfect time to end. I will eat and just relax and then get ready to go. Tomorrow's gonna be a long day for me because I'm out literally the whole day. So I'm gonna stream my best early in the morning. It might just be study, I don't know yet. And then we'll stream in the morning, and then I'm out for the whole day. I won't be back till midnight. In theory, I would have liked to have left my house at 9, but I might leave at maybe 10ish. That'll give me better time to do what I need to do. But I still need to leave early and be quick when I go out. It's a big job I have to do. So I'll catch you guys tomorrow morning, GMT, and I will catch you guys in a bit. For any updates of this trade, see Telegram. I've set a stop loss above this bullish candle stick. There is a fair value gap here, so it's possible that price comes up above it. But yeah, we're probably going to just close the trade right now and then secure profits. And yeah, I just closed it manually just because I'm like, well, might as well. And then that ends streaming day today. And then we'll look for some re-entries. And then if there's anything I see, I'll post it on the Telegram. So let me just tell Telegram I've closed the trade. Okay, so re-entries. What I need. So we're in New York, the high of Asia. So you have a couple options really. Can get rid of this. Keep that. Get rid of. Where's you come back up into this area here. Take New York's high. Tag this. Some potential there. I think that's valid. position range. Not feeling it. Oh wait, I'm still streaming, so can't believe I forgot. Right. It's been always CJC. And I'll see you guys tomorrow. Peace.